All right, so we're diving deep today into a topic that's probably on the minds of a lot of Florida homeowners out there, how to finance those home improvements and renovations, right? We've got a great collection of resources that focus specifically on Florida, which is awesome because there's always some unique things to consider down here. And today we're going to break it all down, help you make sense of it all, and figure out what options might be right for you.
Yeah, absolutely. Florida's got its own quirks when it comes to financing. So having these Florida-specific resources is so helpful. I mean, we're looking at traditional home improvement loans. We've got stuff on tapping into home equity and even refinancing, all with that Florida lens.
It's a lot to unpack, so let's jump right in. I mean, we're talking about a whole bunch of different ways you can potentially fund those projects, from good old-fashioned savings to home equity loans, HELOCs, even looking at government programs. We'll even throw in some lender recommendations as we go from different parts of the state.
Exactly. And remember, not every option is going to be perfect for everyone, right? That's why we're here, to kind of break it all down, lay out the pros and cons, and hopefully help you decide what makes the most sense for your own situation and your goals.
And speaking of resources, we've put together a really handy list of all the ones we're talking about today, links to lenders, program info, all that good stuff. You can find those right on the podcast page. So if anything piques your interest, you know where to head for more details.
Think of it as your launch pad for further research, right? We give you the rundown, and those links let you dig deeper into whatever catches your eye.
Perfect. So let's dive into those funding options, shall we? Our first source is actually this article, Florida Home Improvement Loans, March 2025. And it really gives us a great overview of the whole landscape.
I like how it lays it all out, like all those typical ways people finance those renovations before getting into the specifics of each one.
Right. So let's start simple. Personal savings. If you've got the cash on hand, this is often the best way to go, especially for those smaller projects, maybe some energy efficient upgrades. You're not paying any interest. You have complete control over your money.
Absolutely. Nice and straightforward, right? But the flip side, and the article mentions this, is that it does, well, it dips into your savings. So you got to think about that, especially in case any unexpected expenses pop up down the road.
That makes sense. Now, let's talk about tapping into your home's equity, right? That's where we get into those home equity loans and HELOCs. The article suggests that these are really well suited for larger, longer term projects, and that makes sense. I mean, the potential for lower interest rates compared to, say, an unsecured loan is appealing, and you can often get a pretty sizable chunk of change.
You hit the nail on the head there. Lower rates, more cash. Sounds great. But, and the article makes this point really clear, you've got to be aware of the risk, right? Your home is the collateral. So if you can't make those payments, you could be facing foreclosure. Not something to take lightly.
Definitely not. And then there's cash out refinance. Now, this one's presented as a good option if you're thinking major renovations, especially if you've built up a good bit of equity in your Florida home. Basically, you taking out a new mortgage that's bigger than your current one, and you get that difference as cash. Then you can put it towards, well, towards that dream project, right?
And there's even a potential bonus with this one. The article points out that you might be able to snag a lower overall mortgage rate, which could be a real win in the long run. However, it's not all sunshine and roses. It does mean taking on more debt, and there's the whole refinancing process with all those lovely closing costs.
Right, right. So what about those who might need a little extra help? That's where those government grants and programs come in. These are specifically designed to help lower income homeowners with those essential repairs. The beauty is that they can be totally free or come with very low costs. A huge help if you qualify, right?
Oh yeah, incredibly helpful. But there's a catch. As the article explains, the eligibility requirements could be, well, they could be pretty strict. And there's often limited funding available, which means it can be tough to get in on these programs. But hey, we'll actually talk about some of the Florida-specific ones later.
Looking forward to that. Now, for those mid-sized projects, maybe some quicker repairs, we've got those home improvement loans. These seem to be a good fit for those types of projects because the approval process can be a lot faster than some of the other options.
Yeah, speed can be a big plus when you need to get things done. But the trade-off, and the article's upfront about this, is that the interest rates could be a bit higher than, say, a home equity loan or something that uses your house as collateral. Definitely got to shop around and compare those rates carefully.
For sure. And then we've got those personal loans, which can be used in a similar way, right? Mid-sized projects, quick repairs, and you don't have to put up any collateral.
Yeah, the no collateral thing is a big draw for some folks, but just like those home improvement loans, they can come with those higher interest rates. Always worth comparing rates and terms from a few different places.
Absolutely. Now let's talk about those smaller repairs. Maybe something pops up that you need to fix right away, or you're thinking about a minor upgrade. Credit cards are an option, at least for those smaller expenses.
Yeah, and there might even be some perks, right? Like racking up those rewards points. And if you can pay it off quickly, you might even avoid interest altogether.
But And this is a big but, right? The interest rates on credit cards can be sky high if you don't pay off that balance super fast. I think the article really stresses that this option's best for those small, manageable expenses that you can knock out quickly.
Couldn't agree more. Now, have you ever considered those financing options offered by, like, contractors or stores?
Contractor and store financing? Oh, yeah, that can be tempting, especially for mid-sized projects. You see those zero interest offers, and it seems like a great deal.
It can be, but, and this is where that fine print comes in, be really careful with those hidden fees, and those deferred interest things. If you don't pay off the whole balance within that promotional period, bam, you can get hit with a huge interest charge that goes all the way back to the beginning.
Ouch. Yeah, that's not a good surprise. So, what about those of us who are thinking green? I mean, making our homes more energy efficient. Things like solar panels, better insulation. That's where those energy efficient home loans come into play, right?
Exactly. And those can be pretty appealing, especially with the potential for saving money on utility bills down the line. Plus, you might even find some government incentives that sweeten the deal even more.
Sounds good, but what does the article say about potential downsides?
Well, it points out that they might not be as widely available as some other loan types, and the application process can be a bit longer. So if you're thinking about going this route, definitely do your homework and compare your options.
Makes sense. All right, so we've covered a good chunk of those initial options, but now let's take a deeper dive into home equity loans and HELOCs, specifically in the Florida context. I think our second source here, Florida Home Equity Loans and HELOCs, see options and eligibility March 2025 is going to be super helpful for that.
Absolutely. It's a great resource for really getting into the nuts and bolts of these options, especially all those things that are specific to Florida.
Okay, so let's start with the basics. What exactly is home equity? I think a lot of people hear that term, but they might not fully understand what it means.
Right, it can sound kind of jargony, but it's actually pretty simple. It's basically the difference between what your home is currently worth on the market and what you still owe on your mortgage. So say your Florida home is valued at, $300,000. You've got $200,000 left on that mortgage. You've got $100,000 in equity.
Oh, okay, yeah, that makes sense. It's like the portion of your house that you actually own free and clear, right? The article goes on to talk about some things that can impact that equity number, especially here in Florida.
Yeah, like how property values in a lot of parts of Florida are generally, pretty strong. And that's especially true along the coast. Location really matters. Big cities like Miami, Orlando, they tend to see faster appreciation, but then there are those seasonal factors too, especially in tourist-heavy areas. And let's not forget those natural risks, hurricanes, flooding, that can all play a role in how property values fluctuate.
Right, it's all connected. So now let's break down the two main ways you can actually access that equity. Home equity loans and HELOCs. What's the difference between those two?
So with a home equity loan, you get a fixed amount of money all at once, a lump sum. It's like a traditional loan. You've got that fixed interest rate and those predictable monthly payments, and it's all spread out over a set term. So that predictability makes it a good choice for, say, a big renovation project, consolidating debt, one-time expenses.
So more like a traditional structured loan. What about HELOCs? How are those different?
HELOCs, or home equity lines of credit, they're a bit more, more flexible. They work a lot more like a credit card. You've got this draw period where you can borrow as you need, up to a certain limit. But, and this is where it gets tricky, the interest rates are usually variable. So they can go up and down with the market, which means your monthly payments can change too.
That flexibility could be really handy for certain types of projects, especially if you don't know the total cost upfront. Now, what about qualifying for these things? What are lenders looking for, especially here in Florida?
They're looking for pretty standard stuff. Good credit, of course. They usually want a minimum credit score around 620. Then there's that debt-to-income ratio, which should ideally be below 43%. And they're going to want to see some equity in your home, at least 15 to 20%, plus a stable income.
Makes sense. Now, are there any Florida-specific rules or things that we should know about when it comes to these loans?
Definitely a few. First up, that homestead exemption we've got in Florida, that can actually impact how much you can borrow. Lenders got to make sure they have a secure lien on the property, so that exemption can sometimes limit the loan amount. And then there's insurance. Depending on where your house is in Florida, lenders are likely to have specific rules about hurricane and flood insurance. And the article even points out that those property appraisals they do got to be done by a certified Florida appraiser.
Good to know. So interest rates, always a big concern. What's the current situation for home equity loans in Florida?
So the article includes this really cool survey of Florida homeowners who actually got home equity loans back in March of 2025. And what's really neat is they show the real rates people got, not just those advertised teaser rates. They break it down by credit score, by lender type, even include satisfaction ratings.
Super helpful. So what's the takeaway? Any trends?
It's interesting. Credit unions in Florida are consistently showing lower average interest rates, especially compared to banks and online lenders. And they tend to get higher satisfaction ratings, too.
So credit unions looking good so far. What about those pesky fees? What kind of costs are we talking about with these home equity loans and HELOCs?
Well, there's usually an application fee, although those are usually not too bad, maybe $25 to $50, but you're almost guaranteed to pay for that home appraisal, which can set you back $300 to $500. And then a title search, probably another $100 to $200, and of course those closing costs.
Closing costs, never fun. What are those usually looking like?
It varies depending on the lender and the size of the loan, but it's usually in the range of 2 to 5% of the total loan amount. So yeah, it can add up.
Any tax benefits to consider with these types of loans?
Potentially. The article mentions that the interest you pay on these loans might be tax deductible, especially if you're using the money for those home improvements. But big disclaimer here, always keep good records and talk to a tax pro, right? It's better to be safe than sorry.
For sure. Now, the article has some cool examples of how Florida homeowners are actually putting these loans to good use. What are some of those?
Oh, there are a couple of great ones. They talk about this family in Miami who used a home equity loan to redo their kitchen, spent about $18,000. And guess what? It boosted their home's value by 17%. Not bad, right?
Wow. Yeah, that's impressive. Any other examples?
Yeah, they also highlight this retiree in Tampa who used a HELOC to create like an emergency fund for medical expenses. Smart move, right? Gives them that safety net without having to touch their savings.
That's a good idea. So let's talk about the actual application process for getting a home equity loan or a HELOC. What does that look like?
Well, there's the prep work, right? Check your credit report, make sure everything's accurate. Gather all those financial documents, tax returns, pay stubs, stuff like that. Have your insurance docs ready to go.
Okay, so you're all prepped. What's next?
Then it's time to shop around. Compare offers from different lenders. You want at least 2 quotes, plus whatever your current lender's offering. Then you'll submit that application with all those documents we talked about, schedule that home appraisal, and finally go over those closing documents.
And when choosing a lender, what should we be looking for? I mean, what are the most important things to consider?
The article's pretty clear on that. Rates are huge, of course, but also those fees. And then there's the customer service, right? How easy are they to work with? Do they really understand the Florida market? How long does it typically take them to get things done?
Makes sense. Now, we got to talk about the risks, too. There are always risks when you're dealing with any kind of loan, but what are some of the specific risks with home equity loans and HELOCs?
Well, you've got those market risks, things like property values going down, and especially with HELOCs, those interest rates can go up. Then there are the personal risks, like you're obligated to make those monthly payments. If you can't, foreclosure is a real possibility. And of course, taking on more debt can make it harder to borrow in the future.
Yeah, got to weigh all those factors carefully. All right, so let's shift gears a bit and talk about those traditional home improvement loans. We touched on them before, but let's go a little deeper. I think that same Florida Home Improvement Loans March 2025 article has some good info on those as well.
It does, and it actually compares them to those personal loans we talked about earlier. It says they're pretty similar, but specifically geared towards those renovations and upgrades. They can often be easier to get than those home equity products, but the interest rates can be a bit higher.
So trade-offs again. What about interest rates? What's the survey data saying about those for home improvement loans in Florida?
They actually surveyed people who took out home improvement loans in March 2025, similar to that home equity loan survey. And they break it down by credit score, lender type, even include those satisfaction ratings.
Nice. Any trends there? Anything jumping out?
Well, it's pretty consistent with what we saw before. Credit unions, they seem to be the winners again. They're consistently offering lower APRs and getting higher satisfaction ratings from borrowers across the board.
Wow, credit unions on a roll. They also surveyed lenders themselves, didn't they? What did they find out from that?
Yeah, it was all about the borrower experience. They asked homeowners to rate things like how easy the application process was, how satisfied they were with the terms and rates, that kind of thing.
Cool. So what did they find?
Online lenders, they got the highest marks for how easy it was to apply, which makes sense. But for satisfaction with those loan terms and rates, credit unions, way ahead of the pack. For support and guidance, banks and credit unions both did well.
So it really depends on what's important to you, right? Easy application, low rates, lots of hand-holding. Different lenders might excel in different areas.
Exactly. And the article gets even more specific. They actually recommend some lenders based on county, which I thought was super helpful.
Yeah, that's awesome. Like local recommendations. That's great.
Totally. Like in Miami-Dade, they're recommending Tropical Financial Credit Union and City National Bank of Florida. In Broward, Power Financial Credit Union and Bright Star Credit Union. Palm Beach County Credit Union and Seacoast National Bank. For the Tampa area, in Hillsborough County, Suncoast Credit Union and the Bank of Tampa.
Wow, that's super specific.
I know, right? And it just keeps going. Orange County, Fairwinds Credit Union and Addition Financial Credit Union. St. Petersburg and Pinellas County, Suncoast Credit Union again, and GTE Financial. Duval County, which includes Jacksonville, they're suggesting ViStar Credit Union and Community First Credit Union of Florida. Fort Myers, Achieva Credit Union and Sanibel Captiva Community Bank. Polk County, that's Lakeland, Mid-Florida Credit Union and Center State Bank. And finally, Brevard County with Palm Bay, Space Coast Credit Union, and Achieva Credit Union.
Phew, that's a lot, but so helpful. What about those online lenders? Any specific ones that stand out for Florida homeowners?
Yeah, they highlight Lightstream and SoFi. Lightstream is known for those low rates, no fees, and they often fund loans super fast. SoFi, also no fees, quick funding, and sometimes they even offer unemployment protection.
Interesting. So, what about qualifications? What do lenders look for when you're applying for these home improvement loans?
Pretty standard stuff, actually. They're going to look at your credit score, want a score of 620 or higher. Then there's that debt-to-income ratio, which should ideally be below 43%. If the loan's secured by your house, they'll consider your home's value and how much equity you've got. And obviously, you'll need proof of income.
So, what does that application process look like?
It usually starts with, you guessed it, research. Compare those loan options. Check with your local banks and credit unions, see what they offer. Look at those online lenders too. Then pull your credit report, make sure everything's good. Gather all your documents, things like proof of income, info about your house if the loan's secured, and maybe some detailed estimates for your project. Finally, submit that application and then review those offers.
The article has these 5 things to know before applying. What are those?
Okay, so first up, that credit score. A big score gets you better terms and rates. Second, know exactly how much you need. Make a detailed budget. Don't borrow too much or too little.
Makes sense. What else?
Third, understand those repayment terms. Most loans are 3 to 7 years. Make sure those monthly payments work for your budget. Fourth, those interest rates. They're usually fixed, which means those payments stay the same, but always compare rates from different lenders. And lastly, those fees. Know what you're paying for. Origination fees, prepayment penalties, all that stuff.
Lots of good advice there. Now, how do these home improvement loans stack up against those other options like home equity or refinancing?
So compared to home equity loans, the rates might be higher, but you might not have to put your house up as collateral. HELOCs, they're more flexible, but those interest rates could change. Cash out refinance, that one messes with their primary mortgage. And those Title I loans, those are usually for smaller amounts and backed by the government.
Oh, so many choices. Any other types of renovation loans we haven't mentioned?
Yeah, a few more. Personal loans are unsecured, super fast, but higher rates. Then there's that FHA 203K loan. It's a mortgage that covers buying or refinancing in renovations. VA renovation loans are great for veterans, good rates, no down payment. And finally, PACE financing. It's specifically for energy-efficient stuff and gets repaid through your property taxes.
Sounds like there's something for everyone. Okay, let's talk refinance. Can we use that to fund those home improvements? We've got those 2 sources here. Florida Home Refinance March 2025 and a 150 Florida Mortgage Refinance Lenders Recommendations MFP. Those should be helpful.
Totally. Refinancing is all about replacing your current mortgage with a shiny new one, hopefully with better terms, like a lower rate.
Right, and a cash out refinance is where you actually get some of that equity back in cash or you can then use for, well, for those renovations. What's happening with the refinance market in Florida? Any trends to watch out for?
So the Florida Refinance article talks about how the market here has been pretty good. Property values are up, people have more equity. That means more opportunities for refinancing. But it's not the same everywhere. Places like Miami are seeing crazy appreciation, while Jacksonville's in moderate but still solid. And the lending market in Florida is pretty competitive, which is good news for borrowers.
So, what about those Florida-specific things we need to know? Any quirks when it comes to refinancing in the Sunshine State?
Oh yeah, insurance is a big one. Those hurricane risks mean higher premiums, which can make it harder to qualify.
Oof, that's rough.
It is, but on the plus side, those property tax breaks we get in Florida, like the Save Our Homes thing and the homestead exemption, those usually stick around even after you refinance. As long as the owner doesn't change, you're good.
That's a relief. So, which refinance programs are best for getting those renovation funds?
A regular conventional rate and term refinance is good if you just want to lower those monthly payments. But for renovations, that cash-out refinance is the way to go. That's how you tack into that equity. They even talk about a homeowner in Sarasota who used it to pay for hurricane protection, which actually lowered their insurance premiums. Pretty smart, right?
Yeah, that's awesome. So, what about those refinance interest rates? What's the latest?
More good news for credit unions. They're often offering the lowest rates, along with those online lenders. They also tend to have happier customers. The survey breaks it down by credit score, loan term, fixed versus adjustable, the whole 9 yards.
Helpful stuff. So, when's the best time to actually refinance? Any tips?
Well, they say to look for rates that are at least 0.75% lower than what you've got now. And don't forget about hurricane season. A lot of lenders slow things down or even pause applications during hurricane warnings, and it just takes longer overall during that time.
So, timing is key. Got it. What about the application process? How does that work?
First, figure out what your home's worth, maybe even get a preliminary appraisal, especially if the market's been moving a lot. Then it's lender time. The article talked about the pros and cons of using a local Florida lender versus a national or online one. Local lenders know the market, but those national ones might have better rates. Once you've picked your lender, it's application time. Pretty similar to when you got your first mortgage.
And those closing costs, those always come up. What can we expect with refinancing?
Brace yourself. You've got title insurance, recording fees, those settlement agent fees, and other appraisal, and that Florida documentary stamp tax. They suggest some ways to maybe save some money, like asking about those no closing cost options. Or if you've refinanced recently, you might get a break on that title insurance. And always shop around for the best fees.
Shop around. Got it. What about those appraisals? Do those work any differently when you're refinancing and planning to use the money for renovations?
So the article says that those Florida appraisers are going to factor in any upgrades you've done, like hurricane protection, energy efficiency, new systems. But those appraisal waivers where you don't need a full appraisal, those might be harder to get in riskier parts of Florida, like those flood zones and coastal areas.
Speaking of risks, what are some common challenges people face when trying to refinance in Florida?
Well, we've already talked about insurance being a pain. Those high premiums can be a real obstacle. And if you've had claims in the past, that can spook some lenders. Then there's the whole hurricane season thing, which can slow things down. And documentation, make sure you have everything up to date, like those wind mitigation reports, which can actually lower your insurance.
Paperwork, always fun. Any inspiring refinance stories?
Yeah, they share a couple of good ones. One's about this family in Gainesville who refinanced to a much lower rate and end up saving a ton of money each month. And then there's this family in Tampa who used a cash-out refinance to pay for those hurricane upgrades, and those upgrades actually led to big savings on their insurance premiums.
Love a happy ending. What if refinancing is just not in the cards? Any alternatives for getting those renovation funds?
Definitely. HELOCs are a good option. Flexible borrowing, potentially lower closing costs. And there are some Florida assistance programs out there, like the Homeowner Assistance Fund. That one's for folks facing financial hardship. And always check out what your local city or county offers. You might be surprised at what programs they have.
Good reminders. So, any common refinance mistakes to avoid?
Definitely. Insurance. Review your coverage, be upfront about past claims, and shop around for the best rates before you start the refinance process. As for timing, try to steer clear of hurricane season if you can, and paperwork. Have all your ducks in a row, especially those wind mitigation reports.
Okay, so the last part of that Florida Home Improvement Loans article talks about some programs and considerations that are unique to Florida. Let's dive into that.
Yeah, this part is all about those Florida-specific resources, which are super important. They talk about those Florida Housing Finance Corporation programs, especially the SHIP, which is the State Housing Initiatives Partnership.
Okay, break that down for me. What exactly is SHIP?
So SHIP gives money to local governments all over Florida for different housing programs, including stuff that helps with home repairs. The article really stresses that you should check with your county to see if they use SCHIP and what kind of help they offer.
Got it. So it's a county by county thing. What about other local initiatives? Do cities and counties have their own programs?
A lot of them do. They highlight Miami-Dade County, for example. They've got a single-family rehabilitation program that gives out low-interest loans for repairs and improvements. The takeaway here is to call up your city or county housing department and see what they've got. You might be surprised.
Always worth asking. What about those of us out in the more rural parts of Florida? Anything for them?
They mentioned the Rural Housing Repair Loans and Grants Program, which is run by the USDA. That one's for very low-income homeowners in rural areas, helps them with those essential repairs and upgrades.
Awesome. And lastly, the article really emphasizes following those Florida building codes, especially for those of us doing home improvements. Why is that such a big deal?
Well, with all those hurricanes we get, Florida's got some pretty tough rules about wind resistance, and those rules can even vary depending on where you live.
Makes sense.
So it's really important to hire contractors who are up to speed on those codes. It's about safety, protecting your investment, and making sure you can actually get insurance. If you don't follow those codes, you could run into some serious problems.
Yeah, not worth cutting corners there. Always make sure that contractor knows those Florida codes inside and out.
Absolutely. It's about protecting your home, keeping your family safe, and making sure you're covered if a hurricane decides to pay a visit.
Good advice. Well, I think we've covered a ton of ground today. We've gone over all those different ways you can finance those home improvements in Florida, from loans and equity to refinancing and those special Florida programs.
And as we've said throughout this whole conversation, the right option for you really depends on your own situation, your finances, the size of your project, and your comfort level with different types of loans.
Couldn't have said it better myself. So take some time to look into the lenders and programs we talked about, the ones that seem like a good fit for you. And remember, we've got all those resources for you on the podcast page. Links to lenders, program details, all that good stuff.
We hope this deep dive has helped you understand your options a bit better and given you the confidence to take that next step.
Absolutely. So now that you've heard all this, what seems like the most promising path for you? What's going to help you reach those home improvement goals? That's the question to keep in mind as you move forward.